this is Sean from Sean's Stock Strategies. Today, let's learn what is the VIX. So VIX is this measure of the stock market fear. So what they're taking the 30-day expected So it's a 30-day expected volatility. Let me give you the expression. Anyway, let's skip this expression, the calculation, but let's look at the chart. So this is the chart. This is just 1 month from for I think 1/1/20. Well, let's see what is today. 4/9/20. So we have basically here, and then we're seeing the stock market right now 54 VIX right now, and just last month. So just last month, the VIX was at 14 before this kind of coronavirus, and then that started ramping up fears as the Chinese kind of hid the numbers. It looked like it was worse than it is. It got abroad that it turned out it was more worse than it is. It looks like maybe the U.S. is kind of scrambling, not knowing what they're doing. Italy's scrambling, not knowing what they're doing. The numbers in South Korea exploded, and then now it looks like they're a little bit under control, but the market really doesn't know what this is going to have, the impact of this. We've seen cargo ships stop shipping out of China, so it's going to be a huge economic hit to the Chinese market on exports as well as imports from China into the U.S. and Western Europe, which are the main drivers of the Western stock markets, which kind of drive the whole thing. So 14 to 54. Let's look at the historical volatility. So let me change the range on the time. So I'm going to do a shorter chart here. This is 2008, 2020. So we're basically from 2008, which we know is the real estate crisis, to the current coronavirus panic. So 55, and it's gone really low and then back up to 54. So what we can see is the market is panicking as bad is in real estate crash and now corona crash. So we have these two disparate. You can see the average is really low during most of that time frame, which is 12 years of basic stability, and then you have these high points, boom, right here. So basically that VIX tells you when the market is most fearful, when their selling's the highest. You want to be in cash as that hits because the panic is just going to drive people to sell. Some people can hold to the bottom and then back up. Fine, that's your strategy, but I would encourage people as that VIX starts peaking, consider to sell earlier in the crash and then buy at the bottom. Now people say that's not possible, but you can tell at the bottom when it starts to stabilize. Usually you'll usually have a crash, and then somewhere around here you'll see the volatility will maximize. So once that volatility maximizes, it gotta go like this and then back up. And so usually you'll have a bull market kind of subsidize off and then it'll tank. So this major volume driver will be when that will peak, and that'll be kind of right at the bottom of this VIX when people start to take corrective action and they're like, oh, we're solving the solution, right? In this case, it was the bank bailout by Obama that kind of quieted the markets. We're like, all right, things are under control. We've lost our major companies, but the stock market's settling, right? People felt in control. Now the coronavirus, as it's right now 54, I think it's going to drop that down when the vaccines come out or the death starts going down and people are like, oh, it's just like a normal flu. Right now, people are in a panic mode. They think it's going to kill everyone on the whole planet kind of thing. And it's unrealistic, and the official people say one thing, the gospel mill says one thing else, and people are like, well, the real number's real because the original real numbers out of China seemed a lot of fake numbers. People knew that China lied about the flu, 54 cases last year in 2019 when they have a 1.4 billion population, so they really should probably have 100 to 140,000 deaths from the flu, and they're saying 54. So this kind of creates a lot of weakness in the market because we're relying on China market as kind of the starting point. Now we're getting into the Western numbers. The reporting we think is better, so that's going to quiet that fear factor down. So once we see this come down and you see the market, settle, you're probably going to see the combination between the VIX going down, possibly a volume spike to kind of trigger that people just sold at the bottom, and that's when you want to get back in. So that's how the VIX work, and I would recommend always keep a watch on this. You can there are short-term elements to bet on the VIX, but it's very difficult to predict. I've been burned personally twice. I've made a little bit of money on the Corona spike on the VIX, but it's very hard to predict. So I would just use that as a gauge of when to buy and when to sell, more than trying to buy that spike in between unless you're a real professional trader. And that's my tip of the day.